Most of the time, the market just moves around. No clear trend, no clean moves, just movements that liquidates accounts. Only a small part of the time, the market actually trends, and that's when traders make real money. The problem is knowing when a trend is real and when it's just a trap. In this video, I'll show you an amazing indicator I have found and show you how to combine it with another amazing indicator to filter out the noise and open amazing profitable positions. Now let's start by adding our first indicator. I'm in TradingView. First of all, go to the Indicators tab and search for RK10MA types ribbons. It's written by Rodrigo Kazuma. Add it to your chart and you'll see a big ribbon appear. But don't be fooled. This isn't some basic moving average ribbon. It's a full toolkit that gives you flexibility and control to shape it exactly how you want. Open the settings. You can do that from here. And go to the moving average setup. You'll notice there's a huge list of different types of moving averages, not just simple or exponential. You've got things like triple exponential, Hull, weighted, and so many others. This is important because depending on your strategy, you might prefer one type over another. By default, it uses a full set of 10 moving averages, but you can adjust how many you want, the starting length, and how each one increases. You can even choose the method for those increments: arithmetic, manual, or Fibonacci. Personally, I like Fibonacci because it naturally spaces the lengths apart in a logical way. The starting length is 8 by default, so from 8 it generates 10 different moving averages growing based on Fibonacci numbers. That means you'll see values like 8, 13, 21, 34, all the way up to 610 for the longest one. So what we've got here is a full set of moving averages ranging from very short term to very long term, stacked right on top of each other. And on the right side of the chart, you'll even see a table showing each one's length. Now the ribbon itself changes color based on trend. When the market is bullish and the price is above the moving averages, the ribbon turns green in different shades. When the market is bearish and the price is closing under those averages, the ribbon turns purple. But here's where it gets powerful. When the price is above all the averages, from the shortest to the longest, it's telling you the trend is strong, clean, and aligned. When the price starts moving below the shorter averages, that's weakness. It might just be a pullback, or it could be the early stages of a reversal. So as long as price stays above the longest moving average, you're technically still in an uptrend, but weakness is showing up. Same logic applies in a downtrend. If the price is below all the averages, the downtrend is strong, as we can see over here. But if the price starts crossing back above the shorter averages, it's showing weakness. Here's the key tip. Don't treat every signal from the ribbon as an entry. If you do that, you'll get many false signals in rang markets. In a flat market, this ribbon will change colors constantly and give you tons of false signals. You need to use it primarily to identify when the market is trending and when it's not. When the ribbon is fully green, focus on buy trades. And when it's fully purple, focus on sell trades. When it's messy and mixed colors, step aside to stay completely on the safer side, or lower your risk. Now to improve this even more, let's combine it with another indicator.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
So open the Indicators tab again from here. Search for the Andian oscillator. Add the one created by Alex Grover. Add it to your chart. You'll see 3 lines: green, red, and orange. The way it works is simple. When the orange line is above both green and red, it means the market is flat, non-trending. When the green line is on top, buyers are in control. When the red line is on top, sellers are in control. This is the perfect filter for our ribbon. The ribbon shows us trend direction, and the Andian oscillator gives us confirmation for entries. Let me explain with an example. Suppose the ribbon is fully purple, showing a strong downtrend. In the Andian oscillator, we want to see the red line cross above the green line, and then above the orange line. That's the exact signal we need to confirm selling momentum. When that happens, the sell setup is confirmed. You can enter a sell trade at the close of that candle, set your stop loss, and take profit. And that's a solid trade. Let's look at a live sell trade example. Here we can see the ribbon is purple again, so the downtrend is confirmed. In the oscillator, we can see that here, the red line crossed above green and above orange lines. Perfect. So this is our sell signal. So for example, you can open a sell position over here. You can set the stop loss above the swing high for a sell trade. And you can target a risk to reward ratio of 1.5 or more if you want. The key tip here is to ignore weak crossovers. If red just wiggles above orange without crossing green first, don't take it. That's noise. You want the clean structure of red over green, then red over orange. Now let's talk about buy trades. So for a buy trade, we want the ribbon to be fully green, showing a strong uptrend. In the oscillator, we want the green line to cross above red and above orange line. That's our buy signal. You can enter a buy trade here, set your stop loss, and take profit targets. This setup works because the ribbon shows overall strength and the oscillator confirms momentum is in your favor. Let's go through one live buy trade example. Here we can see the ribbon is green, so we know the market is in a strong uptrend. So now if we get a proper buy signal from our Andian oscillator, we know we can open a buy trade. And here we see the green line crossed red and orange lines and moved above. So this is a perfect signal. We can open a buy position here. The stop loss for a buy trade can be set at the recent swing low, and the take profit target can be set at 1.5. Or you can even use a trailing stop loss or take profit method to make the most out of your trades. Now here's something important. Not every signal is going to work. This is a trend-following strategy. If the market is reversing or ranging, you'll still get false signals. That's normal. The goal isn't to win every trade, it's to win big when the trend is real and keep losses small when it's not. If you notice the orange line in the oscillator is staying above everything, that's your warning the market is flat. Don't try to force trades in that environment. Step aside, save your capital, and wait for a real trend. So to sum it up, this indicator shows you when the market is trending and in which direction. The Andian oscillator confirms whether buyers or sellers are actually in control. Together, they cut out a lot of the guesswork and keep you trading with the flow instead of against it. But remember, no indicator is perfect. Use this combo as a guide, add your own price action analysis, and stick to proper risk management. That's how you build consistency. Alright, that's it for this video. If you enjoyed this breakdown, hit the like button, drop a comment with your questions, and subscribe so you don't miss the next strategy. Thanks for watching the video till the end. I'll see you guys in the next video.